A U.S.-China soybean deal is in jeopardy, leaving farmers in limbo. But here's the catch. Despite President Trump's agreement with Xi Jinping, China has only purchased a fraction of the promised amount. The Agriculture Department's recent data reveals a mere 332,000 tons of soybeans bought by China since the deal, a far cry from the 12 million tons expected by the end of the year. This raises questions about the validity of the agreement and the impact on American farmers. Controversy arises as experts suggest China has little incentive to buy from the U.S. With ample soybean supplies from Brazil and South America, and remaining tariffs making U.S. soybeans pricier, China's commitment to the deal seems uncertain. Tanner Emke, CoBank's lead economist, highlights the disparity between the promised and actual purchases. He states that China's agreement may have been conditional on attractive pricing, adding complexity to the situation. President Trump assures that China will increase soybean purchases, but the lack of details raises concerns. The high Chinese tariff on American soybeans, despite a recent reduction, further complicates matters. Soybean prices have taken a hit, dropping 23 cents to $11.24 per bushel, reflecting the market's reaction to China's limited demand. This is despite prices being higher than before the agreement, indicating the market's anticipation of significant purchases. Adding to the farmers' woes, the promised aid package during the trade war has been delayed due to the government shutdown. The uncertainty surrounding future aid exacerbates the challenges farmers face. A historical perspective. American farmers have experienced similar situations before. The 2020 trade agreement with China promised substantial crop purchases, but the COVID-19 pandemic disrupted trade. Despite a record high in farm exports to China in 2022, the situation remains volatile. Interestingly, soybean prices are higher than last year, even without China's usual purchases, due to a smaller crop and strong domestic demand. However, rising costs for fertilizer, seeds, equipment, and labor are squeezing farmers' profits. Caleb Ragland, president of the American Soybean Association, expresses concern about the potential for thousands of farmers to go out of business without Chinese purchases or government aid. He remains hopeful, but acknowledges the uncertainty with limited sales. China, the world's largest soybean buyer, imported over $12.5 billion worth of soybeans from the U.S. last year. However, the shift to South American suppliers and the ongoing trade tensions have disrupted this relationship. The big question: will China honor the agreement and provide much-needed relief to American farmers? Or will the deal fall short, leaving farmers in a precarious position? Share your thoughts on this complex trade scenario.